Stocks should we buy if interest rates fall? That's the question I'm going to ask ChatGPT today. For those of you who don't know me, my name is Brock, and I am learning how to use AI in finance to make better financial decisions, learn about the stock market, and overall improve my financial health. Once again, this is not financial advice, just showing you my educational learning experience. So, it's 2026 right now. The Fed chair, Jerome Powell, is expected to end his term in May. A new Fed chair is supposed to be coming in soon, with probably the idea of cutting rates given the current situation, the President Trump, and the financial situation we're currently facing. So, with that being said, if their interest rates are expected to cut in 2026, what stocks should we buy? Well, let's ask ChatGPT. So, the first thing I want to do here is say, what stocks should I buy if interest rates are expected to fall in 2026? I'm going to say, give specific stocks and logical reasons why. Put it into a simple, brief chart. Okay. So let's see what ChatGPT says. All right, so they're talking about a couple different things. Next, extra energy, NEE, utilities. They say cheaper borrowing rates reduce capital for infrastructure, renewables, dividends more attractive, and interest rates decline. That's interesting. Utilities are normally something people do in a recessionary time, which could be beneficial. Prologis, PLG, REIT, industrial real estate. Okay, lower financing costs. That makes sense. Realty income, ticker is O. REIT, property income. It's historically sensitive to rates. Lower rates boost valuations. Okay. All right. PayPal. Lower rates can spur consumer spending. Amazon. All right. Cheaper for e-com. That makes sense. Microsoft, Home Depot. Lower mortgage rates. Okay. That makes sense. So the general will say we're seeing a bunch of different things. Home builders. It looks like tech. So summarize what sector and industry would benefit from this rate cuts. I'm assuming it's going to say the home building sector and technology because we're seeing real estate would be beneficial, utilities. Why are they saying that? Capital intensive projects become cheaper. Okay, financing. So basically when interest rates are going to be cut, according to ChatGPT, we're saying real estate's going to be better, utilities, technology, consumer discretionary, and housing. Okay, that makes sense. So let's scroll back up here. That makes general sense of what we're talking about. Of all of these, which ones would we want to go with? So let's say this isn't a perfect solution, but 52-week low is how some companies value, or I guess the 52-week low is the price in the last year, rolling year. So lowest price, highest price, 52-week low, 52-week high. So let's go of the stocks listed in the chart above. What rank them from lowest to highest 52-week lows? So basically, we want to see what the 52-week low is compared to the current price, so see if we're getting in a good section. And while this is loading, you can see it does take some time. I'm going to follow up with this after looking at that. Okay, so we're seeing 52-week low here. So let me just explain this one thing. So once we figure this out, I'm also going to ask ChatGPT how it compares to the political environment because we're seeing a lot of influence from the government right now. And I want to see what stocks could potentially be influenced by the political environment we're in. Usually we're seeing some boosts, like Intel, we saw that happen. I know Fannie Mae and Freddie Mac are potentially going public as well, so it could be kind of interesting. So PayPal, okay, I did hear PayPal's pretty low. Recently hit lows around this around its range. Realty Income Corp, Next Era Energy, okay, and Lennar Corp. Okay, so we're looking at, I'm going to start with these three: PayPal, Realty Income, and Next Era Energy. Okay, so now let's go let me type back in here, of PayPal, Realty Income Corp, and Next Era Energy. Which one would most likely benefit from President Trump being in office. So we have PayPal, Realty Income, and Next Era Energy are most likely to benefit from them. So they say Realty Income is a pro-business policies, lighter regulation, potential rate cuts favor commercial real estate. Okay, that totally makes sense. PayPal is deregulation, so pro-consumer spending, policy help fintechs, but Trump is not especially been supportive or hostile. Their impact is indirect. Next Era Energy is heavily exposed to renewables. Trump historically favors fossil fuels and opposes renewable energies, which could put pressure on growth incentives. Okay, that makes sense. So we're thinking Next Energy is probably out. It's between PayPal and Realty Income. So if I had to pick one of these stocks, I'm leaning towards Realty Income, but let me ask another question. What would be 3 reasons why I shouldn't pick Realty Income, the stock price, for an investment? Let's see what it could be. Okay, interest rates, that makes sense. We already talked about that. Limited growth upside. Income is very mature. Growth of business acquisition, modest rent increase. Okay, makes sense. Lower single-digit growth. Midterm tech, cyclical. Okay, retail tenant risk. A meaningful portion of revenue comes from retail tenants. Okay, many of which are high-quality risks include store closures, tenant bankruptcy, e-commerce pressures over time. Okay, that makes sense. So, there's a big risk between these two. And then now let's ask, what would be 3 reasons why I shouldn't pick PayPal for an investment? Now, the reason why we're looking at this here, 3 reasons that PayPal, okay, that makes sense. Competitors, Apple Pay, Google Pay, Block, buy now, pay later. That's a whole thing. That's going to be crazy. Limited pricing power. Merchants have alternatives. So PayPal can't raise prices or fees. Volume matters more. Yep, makes sense. Narrative or execution risk. PayPal struggle with strategic shifting and messaging. Investors have lost confidence. Okay. PayPal may be undervalued, but it's not a clean set for you to invest. Okay, confidence. What's the... that's interesting. So if you had to pick either PayPal or... how do I spell this one? Investment... what is this? Realty Income for an investment. Which one would you pick and why? Let's see what ChatGPT says. Okay. Realty Income offers more predictable outcome, lower volatility, and cleaner fundamental case for long-term investors. Okay. So I guess summarizing what we just... actually, let's do it in ChatGPT. Summarize what I asked in a simple chart. I love saying in a simple chart for ChatGPT. It seems to really help. As inclusion stock price. So I asked about Realty Income, key pros, key cons, stable cash flows. PayPal has growth for reacceleration. Cons, slow growth. This is a more conservative approach. Final take is that Realty Income has a preferred choice for stability and income, whereas PayPal has higher risk for turnaround dependent. Okay, that makes sense. So if we're thinking condensed for one YouTube slide graphic, let's try that. One slide YouTube graphic. Let's see what this produces. I was not going to do this, but it's actually kind of interesting. Let's see what it says. So we're going to go with the Realty Income. Let's see what this image creates. I wonder what they think it'll be good. Probably won't be that good, but who knows? So long story short, I'll just summarize this. Basically, we're just using ChatGPT to see what investments we should pick. Once again, not financial advice, but just a good way to see. I may or may not put some investment in this. I have to see what the... I actually have to look in some more information and see if it is any good. But just thought it'd be kind of interesting to see. Now it's saying Realty Income versus PayPal. All right, this is taking way too long. But thank you guys very much for watching. I appreciate the interest. Next video, I don't know what it's going to be, but we'll have to figure out another ChatGPT questions. We're still trying to learn how this is all going to be used. But overall, I'm enjoying this series. So if there's something you guys recommend we should do, let me know, and we can go from there. Thank you.